Previously, we saw how to send an invoice to a customer and then record the payment when the customer pays. In that process, creating the invoice and receiving the payment are two separate steps. This is because the customer may not pay the full amount immediately. They might pay later, or even pay the invoice in parts. That is why QuickBooks records the invoice first, and then records the payment separately when it is received. Now let's look at another type of transaction called a sales receipt. A sales receipt is used when a customer receives a product or service and pays for it immediately. In this situation, we do not need to create an invoice and then record a payment separately. Instead, we can record both the sale and the payment in a single transaction called a sales receipt. A simple real-world example is when we go to a store, buy a product, and pay for it immediately. After paying, we receive a receipt. This is exactly the same concept as a sales receipt in QuickBooks. In this case, the customer does not owe money later. The payment is made right away at the time of the sale. Now let's see how to create a sales receipt. Go to the Create button, which is the plus icon at the top of the screen. Click on it, and under the Customers section, select Sales Receipt. The Sales Receipt form will open. First, select a customer from the Customer drop-down list. In this case, the customer is paying immediately, so we do not need to worry about any existing balance. Next, go to the Products and Services section. Here we select the product or service that the customer is purchasing. After selecting the product or service, we can enter the rate or price. For this example, we will enter $100. QuickBooks will automatically calculate the total amount, including tax if applicable. Once everything looks correct, click Record and Close. Now the sales receipt has been created. To see where it appears, go to the left navigation menu, click All Apps, and then open the Customers section. Select the same customer we used for the sales receipt. In the customer's transaction history, we will see the sales receipt that we just created. For example, if the amount was $100, the total might appear as $108 if tax is included. This shows that the payment was recorded immediately at the time of the sale. So to summarize, invoices are used when customers will pay later, while sales receipts are used when customers pay immediately at the time of purchase.